Good morning, ladies and gentlemen, and welcome to the show. I'm glad to have you guys here. Today is July 24th, 2019, a Wednesday. And let's get on with the show and take a look at what's going on. Let's open up the charts right here. And first, we'll start with silver price. We see it moving up nicely today. 1658. It's up 21 cents on the day. We haven't seen these prices for a while. It's nice to see. Let's take a look at gold. 14.26. It's up $9.60. Boy, it's nice to say it's up rather than, they've smashed it down again. But I don't think they're over yet. I don't think they're over yet in the ability to smash it down. But it's catching a little bit of a bid now, gold and silver. It's because they realize we're heading into this recession. Investors are starting to dawn on the recession is starting to dawn on them. Going back 6 months ago, or even 8 months ago, they were saying, we're going to go into a recession in 2024. And then a couple months later, they were saying, we're going to go into a recession in 2022. And then a month later, they were saying, now it's 2021. And then a month later, then they were saying, now it's 2020. We're going into recession. Well, I'm going to tell you what, guys. We're starting on the leading edge of this recession now. Now. It's not waiting until 2021 or anything like that. It's coming in fast. And Germany's on the brink. Huge economy. It's on the brink of going into recession. Great Britain, United Kingdom, on the brink of going into recession. Italy's fudging the numbers. They were officially declared in recession, and then they say, now we're not in recession, and they're just fudging everything up. They're like the Chinese. The Chinese fudging everything too, fudge the numbers. Talk about fudging the numbers. I got some information for you guys on the latter part of this show about fudging numbers. Okay, so let's take a look now at the Bitcoin, the cryptocurrencies, and see what they're doing. 267.7 billion. Let me refresh the page and see which direction they're moving. 267.6 billion. So we've seen a downward trend over the last number of days. It's got an awful lot of people within the crypto community disappointed. They're disappointed right now. They think it's over. Bitcoin's over. It ain't over, guys. It ain't over. But I'm going to tell you, there is a big problem coming up later for Bitcoin in the future. It's going to go into a massive bubble again. It's not in a massive bubble right now, but it's going to go into a massive bubble. And then that bubble of trouble is going to come when that bubble bursts. I tend to believe that this is going to be the biggest when this bubble bursts. Now, it's not even near bursting because I think Bitcoin's going to make new highs past the $20,000 it made highs before. But then it's going to burst. It's going to burst again. Just like it did when it was at 20,000, it's going to burst again. It's going to be the biggest burst ever of Bitcoin, I believe. Now, this is my opinion only, but I think it's going to burst again. And then we're going to have to go through this process all over again, of it going up again. So that's what we got to look forward to in the future for cryptocurrencies. But right now, what we're doing is we're going to go down and we're going to kind of drift down and we're going to kind of test a bottom here someplace. It might be 9,600. It might be 9,200. It might be 8,900, long in there, might be even 8,600. Heaven forbid it might go down as low as 8,000 and hit support. But then we're going to start to go back up again, and this is the way it works. And we're going to go into this next leg, which I believe is going to take us to $16,000. But here's the thing. Cryptocurrency and Bitcoin are the most dangerous, volatile assets. So this is not financial advice. Do not go out and spend money on this unless it's money that you can afford to lose. I have to tell you guys this because when you're investing in other investments in your portfolio should be your largest part of your portfolio. And if you want to dabble in cryptocurrency a little bit, that's okay. But don't go crazy with this stuff because it's extremely volatile. Let's take a look now at the Dow Jones for the day. And you know, we're seeing the Dow, it's down 118 points so far today. You know, it's down a little bit today, but you know, the Dow is waiting on news from the Fed. The Fed's everything now for this market, for this particular market. The Fed's everything. Whatever the Fed says affects which way the Dow goes. And good news can become bad news, and bad news can become good news because they think to themselves, hey, you know what? If bad news comes in, they think to themselves, hey, you know what? The Fed's going to cut rates because we got bad news. And then the stock market goes up. See? And if good news comes in, they say to themselves, hey, you know what? The Fed's not going to cut rates because good news is coming in. And then the stock market goes down. We're living in a weird world right now. The greatest, longest expansion in credit in the history of the world. And we're also making a transition from the old monetary system over to a new monetary system. A digital monetary system. Transitions like this, transitions that are this impactful to the world system in general, can never go smoothly. And so, up till now, we've got by pretty good, but you know, there's rough water ahead. Let's take a look now at oil prices. Let me refresh the page. We're looking at 56.92 on oil today. U.S. Treasuries today. And we're seeing falling rates on treasuries, you know. It's nothing substantial, but I notice that Treasury's been doing this strange thing for the last month or two or whatever I've been noticing. It's one day up, one day down, one day up, one day down. It's like weird. Really weird. And these capital inflows have been coming in and driving these Treasury yields down. You know? Tremendous capital inflows. This is just a weird situation. And anything that's weird like this won't last forever. It won't last very long. In fact, I can't see it lasting too much longer. Let's take a look now. 97.62 on the U.S. dollar index. And what we're seeing is the dollar is declining today. This is part of what's having an effect on gold and silver, is the declining dollar. This is more normal for gold prices to go up when the dollar goes down, rather than like we have had gold prices going up and the dollar going up, which is weird too. Take a look here at Zero Hedge. Deutsche Bank tumbles as trading revenues plummet. You know, Deutsche Bank can freeze the whole system. It's got a big enough derivatives book, it can freeze the whole banking system. And if that happens, you know, there's only one solution. They have to bail the entire banking system out. And that's the only solution. And if it freezes the entire world's banking system, if Deutsche Bank goes down and it freezes everything, you can bet your bottom dollar that they're going to panic and they're going to hurry. They'll hurry. I know these legislators and lawmakers and stuff dragged their heels for months or even years on a lot of issues. But if Deutsche Bank goes down, freezes the banking system, you've never seen them hurry like they'll hurry on that. They will convene meetings in the middle of the night if they have to, but they'll have it done. Like, they won't wait around. They'll have it done within a matter of probably days or weeks at the most. They'll have it done. I don't even see it lasting weeks. Emergency meetings would be convened. They'd have it done in a matter of hours. It's amazing how, if you put the pressure on these politicians, how quick they can get something done if the real pressure comes on top of them, you know. And if the world's banking system were to freeze up, can you imagine the amount of pressure that would be on them to get something done? And I can tell you what they're going to do. To unfreeze the system, there's only one way. Inject liquidity into it and bail everybody out. It doesn't matter whether we don't want bailouts or we don't. People out there who say the central banks have no tools anymore, they have a tool. Bail everybody out, and they'll use it. Believe me, they'll use it. You think inflation's starting to heat up now? Let them bail out the entire world's banking system and see what it does to inflation, you know? But these banks, that's endless. You bail them out now, they waste some money again, and then they come around a few months later and want to be bailed out again and again and again and again. It never ends. It's ridiculous. Anyway, my video recorder ended on me right there. But let's move on just a little bit, and you guys will just have to listen to what I'm saying because my video recorder ended. It ends at 10 minutes. On this computer, this particular computer, you know, I'm gonna get it fixed so it'll run longer. But anyway, Deutsche Bank today has dropped 2.3%. It's at 6.97. So Deutsche Bank's starting its decline again. There's a little bit of enthusiasm there. Because people said, hey, you know what? They're restructuring. Maybe they'll succeed. Maybe Christian Sewing will be able to pull us all together, you know, by basically destroying parts of the bank. You know, that would be like a guy bringing a wrecking ball into his house and smashing most of his house and decide he's only going to live in the bathroom. You know, everything else is gone. Basically, that's what they're doing. They're taking a wrecking ball to this bank, and they're chopping it to pieces with the wrecking ball. And they say that now it's going to be more successful. No, this restructuring isn't going to work, but it's going to take a few months to actually prove it isn't going to work. But you know, any time in this point in time, between now and a few months goes by, Deutsche Bank could go down suddenly and unexpectedly. It's not like we haven't been warned, you know. Now, I'm going to talk about the Baltic Dry Index just for a second. We've seen a massive increase in the Baltic Dry Index. It's up to 2165 today. And why? Why have we seen an increase? Well, let's see. I'll read a little bit from this article here. What they've done is it says, I wrote about the Dow Transport and the Baltic Dry Index back in April when both benchmarks were well below their previous highs. Today, in contrast, the picture painted by the latter benchmark couldn't be more different. In fact, the Baltic Dry Index has practically tripled since its low earlier this year, and now is higher than where it stood at the summer of 2018. Which economic benchmark is painting a true picture? There is no way of knowing for sure, of course, but note that the Baltic Exchange in March altered how it calculated the Baltic Dry Index. There you go, guys. They've altered how they calculate the Baltic Dry Index. So now you know why the Baltic Dry Index is going up. They're fudging the numbers again like they're doing. You know, now, if numbers start to don't look the way they want them to look, they just do adjustments. Seasonal adjustments, whatever. Right? Or they change the way they calculate the number. I mean, we're living in bizarro land, you know. This is going off the charts. We're actually in uncharted territory right now, and this is so dangerous for our system, for the world's economic system. Everything in this world runs on money, guys. And, you know, this is so dangerous, what we're doing, and we've got no redundant systems in place in case we have a problem. We're like a bunch of parachuters that's jumping out of airplanes that's never jumped out of airplanes before, and we don't have any reserve chute. Thank you guys for listening. We'll catch you guys in the next show. Bye-bye.